Welcome to Mortgage Insider Update for June the 3rd. Wow, summer is here and it's not getting any better in the interest rate department, unfortunately. We did have a little bit of a bounce up in interest rates last week, but then since settled back down. Positive news with inflation as steady Eddie, about 0.3% increase month over month, which unfortunately is more than the annualized 2% rate the Federal Reserve is looking for, but maintaining that 2.7 to 2.8% on both the PCE core and headline inflation numbers, which didn't surprise to the high side and it didn't surprise to the low side. So it leaves us to come up this week for the next big economic data point with the Bureau of Labor Statistics jobs report coming out on Friday. We will get the ADP report on Wednesday. It's kind of a preview, but the big jobs report where they both report on total new jobs created as well as total unemployment rate, which is really the only thing we have to hang our hats on. Is if the Federal Reserve sees a tick up in unemployment, and it might not happen this month, but over the coming months, this summer, that's more likely to be the indicator to push the Fed to change rates way before inflation. Inflation looks like it's going to be here a little sticky in that upper 2%, but not getting any higher, but not coming down to the Fed's target. Let's see what the charts did. Today, we can see the 10-year Treasury down 9 basis points, a significant drop. While both mortgage-backed securities have improved, they're green and going higher, and the yield or the interest rate on the 10-year going down after a spike last week. So we can see, I did a video about this just at the beginning of last week, and we were relatively calm, and we had 2 days of hike and then 3 days coming back down to basically the same levels we were on the week of May 20th, 21st. So, no harm done, but definitely not enjoyable to see that peak up. We will see coming Friday what the news is on unemployment, and that could send us right back higher. If it's good unemployment rate, unemployment drops for some reason, we could be right back where we saw rates pushing that 7.25%. So far this week, leveled back down to around 7%. Mortgage-backed security, again, the prices here go higher as the price improves or increases to the investor, improving or lowering the interest rate to the consumer. So peaking today right at the 100-day moving average after coming off of our lows into last week. So we'll see what the week plays out on Friday with Bureau of Labor Statistics or the BLS jobs report. I will come back to you beginning of next week. Take care.